Was that a dip? Was that all that the bears had? They gained control of the 5 EMA across multiple indices, and then bam, the bulls stepped right back up and bought that quote-unquote dip, if you even want to call it that. Holy moly, this market's absolutely bonkers. We got a lot to talk about in today's episode, but it's going to be very, very compact. There are some bullish type patterns on the 30-minute time frame that I want to kind of go over, and then talk about some positions that I'm in currently preparing for if this is actually a bull move to start breaking out. So let's go ahead and just hop into today's episode. Welcome back. We're going to start here at the market dashboard. You can see here green across the board. We had that VIX crush down 6.32%. Leading the way here, materials, financials, industrials. Now, if you watched a couple briefs ago, we were talking about from a relative strength perspective that materials and industrials looked like the strongest from a relative standpoint. So when we see this market move up, it's not surprising to see materials and industrials leading that specific charge. Energy was in the middle of the way, and then utilities was down there towards the bottom. Utilities has been seeing a lot of strength as of recently, so it's probably going to have to take a little pause here soon. Now, utilities is one of those risk-off type moves. We talked about that in yesterday's brief. It's right back down here towards the bottom. It's going to be interesting to see how these next couple of days play out, right? We saw some very bullish type style candles today across the indices, which we'll get into, and it's going to be interesting to see if we get confirmation follow through to the upside, but we need to kind of just be patient on that. So we'll get into it. Let's hop into the S&P 500 daily time frame. You can see here, I'm going to be pointing out just a quick couple of things here. First off, gap down and then completely engulfed the body of the previous candle, and we closed above it. So just a solid big green candle. The gap down looked bearish to begin with, immediately got bid right back up, basically taking care of those losses for the last 2 days within this 1 day. So impressive move there. Are we going to get follow through? We might. I mean, wouldn't be surprised to see follow through, but I also wouldn't be surprised to see resistance hold at this particular point in time. A little bit of a negative divergence building, but we've seen those resolve to the upside. So we'll see what takes place there. Now, from a 30-minute perspective, we broke down from this. We talked about that in yesterday's brief. We said there's a possibility that can break down the 410 and start heading around these range, but it actually got bid right back up, as you can see. And it kind of got back within this channel here. So what I want to call out is we're moving into this overbought territory right here on the RSI. So just be mindful of that. It might have some resistance around this gap that it left above us. But then also you can say that there's a little left shoulder here, a head, and a right shoulder. So if that's the case, and this just recently broke the neckline, that means we can target probably 420 to 421, which is today's date on the SPY. So imagine a neckline being right here, little inverse head and shoulders, and we break through that. I don't see why we couldn't go target for that area. So be on the lookout for something like that. Now let's look at the NASDAQ. NASDAQ, really quick again, one gap down and then engulf the entire body of the previous candle, recouping a lot of the losses from the last couple of days here. And we are back above this area of resistance. Are we going to get follow through? Is this forming a flag? Hey, it's a possibility. We got to be prepared for if that's the case. We didn't get the selling that we wanted all the way down to here. So if this is it, well then we got to be prepared to catch on to the next move to the upside. Here it is on the Qs. I want to call out this once again. We have a gap above us, so that can act as an area of resistance, but we do have a little left shoulder, head, right shoulder, and it's kind of cracking through that neckline. So be prepared. If that is a break, we can head higher here. We can probably target with a move like that. It would probably target right around 343 to 344. Relatively pretty quickly. Now let's look at the Dow Jones. I'm only going to show the daily time frame. Once again, I'm just going to call out the gap down and then engulfing the entire red body. So that right there is very bullish in bullish context. Are we going to get follow through? Well, let's see if we start getting a daily close above the previous day's candle to confirm. Russell 2000 had a big update, right? 2.44%. We've been talking about this potentially being a flag, but I really wanted to see if we can pick up some right around 210. We didn't quite get down there. Maybe this is a fake out, maybe it's not, it's too hard to tell, but this was also a full engulfing candle, and it's been consolidating here, you can say, for since the month of April pretty much here. So this has the possibility, if we do have follow through throughout the indices and financials continues to see strength, this could be a very good opportunity where we can see a lot of upside, potentially take out new highs, which is right around 235 from where we're at currently, which we closed at 222. So that's a big dollar per share move right there. So we'll continue to monitor. As far as indicators go, fly through these. Lumber to gold ratio continues to drive down. That's because gold right now at this current time is outperforming lumber. So we're going to continue to watch this and see how it develops. It's still, clearly way above zero. So anything could happen at this particular point in time. As far as the BP charts go, we're going to look at the BP SPX and the BP NDX. The gap down today resolved some of the RSI overbought readings. So now this is saying, okay, now we have the ability to turn back up. So keep an eye out for that. It is down while the S&P 500 is up. I think this is mainly due to the gap down, and then we saw the performance run up. So we'll continue to monitor that, but it's no longer in that overbought territory. Same goes for the BP NDX. We had that gap down, no longer in overbought territory. So it does suggest that we can potentially turn up and go higher. As far as a breadth perspective, flat, completely flat, near zero. So pretty strong day overall in the markets. I think these readings are messed up just a tiny bit, not messed up, but they're just off a little bit because of the gap down, and then we ramped higher. So yeah, nothing as far as breadth goes here on this indicator. This indicator, as far as breadth goes, I mean, geez, this thing is just super maxed out almost. 96.99% of stocks. So that's a record here of the percent of stocks in the S&P 500 that are above the 200-day moving average. So history in the making here, folks. Pretty crazy times. Here is the VIX. We broke through this rising wedge. We talked about having some potential resistance up here. We had the upper Bollinger Band, and we said right around this 20 to 20.8 or 20 range. I forget exactly the number said, but 20 because it acted as support. We came up in here, and now it's acting clearly as resistance. And remember, Friday here is just around the corner. We typically get those VIX Crush Fridays, so we'll see here if it continues to drift a little bit lower and then take off, or we just kind of slowly grind a little bit lower here. So we will see. Commodities, gold. Gold is looking a lot stronger right now. This is a good day. Is it a fake out? I don't know yet. It's very hard to determine. We closed, we first had a high right around 1800, so 1798. We closed right just at about that high. So gold is starting to see some strength from the weakening dollar. Silver is starting to see some strength from the weakening dollar. This is looking very good for the miners so far. It's just very, very hard to determine if it's going to be ramped up like this, and we're going to see this move down. So if you are in some positions, just be mindful of having some stops in place or protected puts. Here's silver. Silver, very strong day, up 2.83%, back above the 50-day moving average. Saw a nice move with nice volume. And then the gold move, by the way, it's not the greatest volume, but it is, average right there comparatively to the last few days of trading. But nice big green candle right here with some good volume on silver. So that's a good sign. Now we just got to get above this kind of previous swing high here, and that could be very, very good for the price of silver. Oil took it on the chin today, down 2.1%. Now, this is what's interesting is XLE, the energy sector, did have a decent day. So is this telling us that energy is then going to be, this is a fake out in energy stocks and oil is going to continue to head lower? You got to think that as a possibility. I don't have an energy chart in front of me, unfortunately, but I will say that I did re-enter into my energy position with protective puts just in case if this is a true, gap down, full bullish engulfing candle, and we're going to get some follow through. So I entered in towards the end of the day with protective puts in place, not risking much, but if we do start seeing the energy sector perform, that could be a very, very strong sign here. So we'll continue to monitor oil here. It does, cross back below the 50-day moving average. It looks pretty weak. It looks like it got, hung up at the 64. So what we were saying was if it can, break down through this, we can see it potentially go even, to the 48 to 52 range right around in this kind of vicinity. Bitcoin hasn't been looking too strong, really. So this is interesting. We could potentially be breaking out of this little rising wedge, and this could be a potential bear flag. If we start getting below 52,500, there's a lot of support, like a wall of support here. And to me, that means if the support breaks, we can see a significant flush to the downside. And that flush can take us probably down to this swing low right here, which is right around 45,000. So let's be on the lookout for that. As far as the dollar goes, saw some strength intraday, but then it quickly reverted basically to just slightly down on the day. Still floating around that 61.8% retracement level. Overall, though, you gotta wonder. So the dollar's been falling. The S&P 500 has been having a good time because of it. Then we had some weakness today. I just don't know where this is gonna resolve at, unfortunately. But I mean, overall, in this case, you want to give the bears the benefit of the doubt just because of today's candle, and it's clearly below the 50-day, below the 200, below the 20. So right now, 61.8% retracement level. It is holding for the most part. But if it gives way, I think we're going to go test the yearly open, which was right at just below 90 right here. And that could be very good for the S&P 500. That could be very good for gold. That could be good for silver. That could be potentially good for Bitcoin. We've seen it happen before, so let's see if the correlation continues. All right, everybody, that's all I really have for you on today's episode. I want to go over just a couple of charts here. The first one was the WDC position. I did tell everybody on Twitter that I entered into it towards the beginning of the day. Here you go. This is what the chart now looks like, right? We gapped down. We saw strength. That's a big bullish engulfing type candle. Are we going to get follow through? Hey, it's very possible. If we do, I'm prepared to take it. I have a stop below this candle. If I get stopped out, it is what it is. But you can see here, I have a target price right around 71 and 75 cents. That's my first target, but my main target is going to be this green box, which would make for a full measured move here, which is a big move. I mean, you're not too late to it, to be honest. I hopped in a little too, maybe not too early, but if this starts breaking above $70 and we get a confirmed close, there's no reason why, you wouldn't be late to that if we start getting a continued move. And that's a pretty large move, and that could be a large move in relatively a very quick period of time. Another reason why I entered into it towards the morning was because it filled this gap, right? So we closed here this day, and then we gapped up, and then we pulled back, and then we moved forward. Okay, that's that position. And then my last position was, like I said, I'm in energy now, XLE. I took a sizable position for the most part, but it's being protected by puts. So the risk to my downside is like $400, but the potential upside to where my target is could be, $3,000-$4,000 in profits, just how I have the trade currently structured. So I'll keep you up to date on that. We'll see if it goes, if it continues to move up or not. It's like I said, it's very hard to determine in this current market environment. We need to see confirmation of today's price action to really kind of gauge if this was just a little fake out candle to suck in more buyers, and then we're going to have some, after hour market dumps. It's anybody's ball game at this particular point in time, but bulls definitely have the benefit of the doubt given the current context of this market environment. That's all I got for you. Have a good day.